I'm Robin Bennett, and I'm one of the co-founders of the Dog Gurus. Susan Briggs is over there on the other screen. She's the other co-founder of the Dog Gurus. And our company helps pet care businesses launch, grow, and profit. So we do two primary buckets of things. We do business consulting for pet care businesses to help you grow your business for the business owner. And then we also have staff training programs to help get your staff really onboarded and trained to take great care of the dogs and have a really great facility, everything from dog care through customer service and everything in between. So that's what we do. So definitely check out our website if you have not seen any of our products or services before, and we're happy to answer questions. But for today, we are going to talk about pricing and discounts. And so setting profitable prices, and then also what your discount should look like. And we are big proponents of not doing a lot of discounts. So we're going to get into a kind of why that is, but we're also going to talk about how you can figure out maybe what discounts you could use that effectively help your business and maybe what discounts you could get rid of. So that's a whole big topic. So I guess, where do you want to start, Susan? You want to start with discounts or
Yeah.
pricing?
Let's start with discounts because the reason I like to start with discounts is every dollar that you save by not giving a discount goes directly to profit in your pocket. And Robin, I think that's been one of the things when we help people calculate how much that is, that it can have a shock value because we know our industry has traditionally given a lot of discounts, and we're okay with that, like Robin said, but be strategic so what the discounts you give are a win for not only your clients, but also your business. And so I think it's just getting a strategy going and making sure you're not out of whack. And so the one thing I don't want you to do is compare the discounts you give to your competition because they may not be listening to us, and they don't necessarily have the same cost structure or anything that you have. And I think that's how this industry has gotten into this mode of giving a lot of discounts, is because the business down the street does it. I feel like I have to do it. And we've got a lot of members that will tell you that is not the case. If you're providing great care for the dogs and you communicate value in what you do, you don't have to offer the discounts to keep the dogs.
Yeah, and I think it's funny because I'll talk about our Facebook group at the end of this call, but on our Facebook group, every now and then someone will post, "What kind of discounts do you guys give?" And then you can always see the people that have bought into the fact that discounts aren't needed, and that, which is what we teach, and you'll see them start going, "No discounts, discounts." And then some people are like, "I give multi-family pet discounts or rescue discounts or whatever." And we are not saying you can't give discounts. We would say two general rules of thumb is that all of your discounts, if you add them all together, should be less than 10%. So maybe you have one discount that's 15% and another discount that's 5%. You just don't want to give a whole bunch of 50% discounts or 20% discounts. Your discounts should be less than 10%. And they don't even have to be that high. That would be the max. And the second thing, as Susan said, why are you giving the discount? So when we ask our folks, why are you giving discounts? A lot of times people are like, they have more than one pet. Okay, how does that help your business? Unless you can prove that those people would not come back to you without that multi-pet discount, I would venture to say you don't need to give them a discount just because they have a pet. I had two children. I certainly didn't get a discount on anything that both of them needed. I didn't get travel discounts. I didn't get dentist discounts. I didn't get eye doctor discounts. It's the same thing. Like, nobody was forcing that person to have more than one pet. So if they do have a pet, then they have two, then that's on them. There's not a reason for you to give a discount unless you can really show, oh no, my facility caters to multifamily pets. That's all we have in here, and it really helps us populate all of our lodging enclosures. If that's the case, go for it. But I would say, ask yourself, are taking care of two pets from the same family or three pets from the same family, is it easier? Is it less work? Because most of the time it's not. Most of the time it's actually more work, especially if those pets are not even staying in the same enclosure. Which oftentimes, even if they are staying in the same enclosure, we would still recommend separating them at certain times, like for feeding. So now it actually is not easier to take care of two pets. Things like military discounts or senior citizen discounts, all of those sort of lumped together. There's a certain group of people, maybe first responders, that might be in your business model, and that might be part of your brand to help those types of business of workers. So we have some clients that are right next to, for instance, like right next to a hospital, and they'll have discounts for first responders or maybe for the nursing staff or whatever that work. That's a great way to cater to what your brand stands for and what message you want to send. But I would still have that discount less to 10%. I often got asked about rescue discounts, but to be honest, the majority of my clients did have rescue dogs, so I didn't really feel like I needed to discount for rescue. Now, if it was a rescue group, I might do something for them just because that's a nonprofit, and that, but again, might be part of my brand to work and partner with a nonprofit. But if it was just somebody that happened to rescue from that nonprofit, I didn't necessarily give a discount to that because I was going to get that client either way. So the important thing is ask yourself how the discount is helping your business, and then either get rid of the discount or make sure that that discount is less than 10%. And then Susan, you hit on it really briefly, but do you want to talk a little bit about how to track those discounts
Yeah,
if they're not?
thank you for, because I was just like, okay, I got to geek out a little bit on the accounting side. I hate to do that, but it is important that in your financials that you know how much you're giving away in discounts. And so I would make sure that when you set up your point of sale system, you have what is your full rate, and you show that as income, and then show the discount as a cost of goods sold item, because then you can also see each month how much of your revenue you're giving back in discounts. And that's why I think if there are those community oriented groups and that is part of your brand, you can feel really good about that. And you can even share that if you want. You don't have to, but sometimes your team members like to know that. But if you're just giving discounts for multiple pets and just because you feel pressured from your client base, I would still say you need to know how much that is. And so if you don't have it currently in your bookkeeping, what you can do is look at, okay, how many maybe passes I sold for like daycare packages, and what's the discount off a full rate? How many of those did I sell in a month, a quarter, or a year? And what if they had all paid full rate? How much money did I give back by having packages? And I think sometimes people don't realize that effectively selling daycare packages at a discounted rate is still a discount. They only think about it in lodging, grooming, where you're giving like a percentage off. But most people in our industry sell discounted daycare packages for multiple days. So you've given a discount there. And I think our key point on that is, again, not to do too much. The 10% rule still holds, but also to have expiration dates on those packages. And you want to talk about why that's so important, Robin?
Yeah, before I go to expiration dates, I will say that we have had people who that wanted to give those discounts up until the time that they started tracking how much they were giving away. And we've literally had companies in giving away free in discounts 50 to 100,000 or more in a year just because they're not charging full rates because they're giving discounts. So I think the important part of that tracking is it starts to look a lot worse to you to give all those discounts when you see that was $50,000 or $75,000 you could have actually had added to your bottom line with no change in staffing, no change in the way you're operating, no change in anything other than you started charging your full price. In terms of daycare passes, because that is a common thing that we see, that daycare passes offer a discount the more you buy. And there is a reason for that. Like your theory of giving that kind of discount is that you want somebody to buy the higher package so that you can get them in more frequently. The question I would ask is, does that actually work? Because if you don't have expiration dates, and let's say you have a 30-day pass, or let's say 20, so Monday through Friday for 4 day, for if they're coming every day would be 20 days for a month. If you don't have an expiration date on that, most likely you are not seeing an increase in attendance. If that person just can come whenever they want and they just buy the 20-day pass in order to give a lower price per day. You want to have an expiration date. If you're going to give a discount for multiple days, you want to force that person to come in multiple days, because otherwise you're not helping your business at all. The whole point of those is give the client a volume discount, but you want the volume to be happening in your business as well. So if you're going to do a 20-day pass, I would have maximum that pass is going to expire within 45 to 60 days. And that would be maximum. We see a lot of people that are like, oh, I got to give them 6 months. No, you don't. They should just, if they need 6 months to use their package, they shouldn't buy that big of a package, because that's, again, it's not helping your business. It's not helping you increase the volume unless you have an expiration date where you're forcing them to come in. For smaller packages like 5 days or 10 days, I would have a 30-day expiration date. So they have that month to use it and then they have to buy a new pass. So you just have to make sure that both sides of that equation, the client's getting what they want, they're getting a lower price, but you're also getting what you need, which is higher volume to your business. Otherwise, I just wouldn't offer the passes because it's not going to help you otherwise. The other thing, and this is a long-term thing, but if you don't have an expiration date, when you go to sell your business, that's all liability on your books. So if you have, and even if you have a 1 year expiration date, if you, and this might not pertain to everybody, but it's something to consider, that's all unused days where that have not expired are all liabilities on your books, which means that if you were to sell your business and you have, let's just say 100 passes out there with 5 days each, whatever that cost is, that's actually money you owe whoever buys your business. So that's for that exit strategy reason. That's another reason not to have that kind of liability on your books. All right. So we're going to switch to, if you have questions on discounts or want anything clarified, you can leave that in the comments. Otherwise, we're going to switch over to pricing. And the reason that we're talking about discounts and pricing, these are the two things that you can change without any other changes. The only thing you have to do is figure out what you want to change, whether you're going to get rid of discounts or whatever, and then whatever prices you're going to change. And then you just have to implement them. There's nothing else required. This is one of the fastest ways to generate more revenue for your business with the least amount of work. Now, I won't say there's no mental anguish. There's some mental stress there, but there's no physical. You don't have to hire staff. You don't have to train staff. You don't have to do anything other than figure out what you're going to do and then mentally prepare for it and figure out how you're going to talk to the clients, which is probably the hardest thing. But it's one of the easiest ways to generate more revenue right off the bat. Do you want to talk about cost plus profit?
Yes.
Formula.
There's 3 different pricing methods when you are looking at pricing services. And one that we recommend should be your primary pricing strategy is cost plus profit, which means you know how much it costs you to provide that service, and then you add onto your cost a percentage of profit. And we think your goal should be at least a 20% profit on every service you offer. So then that comes down to, how do you know how much it costs you to provide each service? And that's where it can take a little bit of work. But trust me, when we've helped people dig into those numbers, it's just eye-opening, and they understand their business in a way they never have before. And it is often the key to making that financial turnaround, profitability, and paying yourself the salary you deserve as an owner. Cost plus profit, we'll dig into understanding your costs in a minute. I'll just go through what the other 2 pricing methods are. One is a comparison to competitors. I think it's always good to know that. But the key when you're comparing to competitors is to make sure if you're comparing apples to apples. So you really need to know what they're providing for that price. Is it the same as what you provide? Even down to the level of care and how staff are trained, because those are differentiating points. And then the third method for pricing is value, which is basically what value are you providing to your customer and how much are they willing to pay?
Yeah, and I would say what we get a lot of times is that comparison idea. Like people will go, oh, I don't want to be the lowest in my area and I don't want to be the highest in my area. So I called everybody and figured out what they were charging, and then I charged something in the middle. Maybe that works, but the problem with that theory, and I would definitely say know what your competition's offering, but the problem with basing your pricing on that is you don't have, Susan said before, you don't have any idea if those people are going to be out of business in 2 years or 1 year because they aren't profitable themselves. You also have no idea if they're offering the same quality service as you are, which goes to the value. We want to offer the best value, which is normally translates to you can charge a higher price. So I don't think there's anything wrong with being the highest price in your area, but don't just price it based on, I think I can charge this exorbitant amount, or I think I should only charge this because of the people down the street or what they're charging. So you really do have to figure out your expenses to make sure that you're at least covering your expenses. And Susan and I will say right now, if when we had our daycares, which was, I don't know, 15, 20 years ago,
Yeah.
we were charging 15, 20 years ago, we were charging $24 to $26 a day. If that's how much you're charging now, I can guarantee you, unless you're operating out of your house with no mortgage and no lease, you're not making money. There's no possible way that you can run, assuming you're running a safe daycare. If you're running a safe daycare and that's your pricing, I would definitely be looking at your pricing, because there's just no way you can be profitable. And then here's the other thing is, you want all of your revenue streams to be profitable independent of each other. So we see this a lot. We see a lot of people that the business as a whole is profitable. And let's say they offer daycare boarding and training. So the business as a whole is profitable. But then when we sit down and go through every revenue stream and you allocate expenses to all their different revenue streams, generally what we see is boarding is really profitable. Day training is fairly profitable, and daycare is not profitable at all. The business is profitable because those other two revenue streams are making up for the losses in daycare. So you really want to look at that daycare revenue stream and make sure that revenue stream by itself is profitable. So that, because if it's not, then you would just be better closing off the daycare and just running those other two profit revenue streams. You would be more profitable. And your daycare is a lot of work. We want to make sure that's a profitable revenue stream. So real quick, Bowser's Pet Training said, we looked at our reports and see we gave away $8,247.50 in discounts for the whole year. That's not bad, assuming that's less than 10% of your revenue.
Yeah.
So it's hard to say since I don't know what your revenue is, but if that's less than 10% of your revenue, which it probably is, but I don't know if you just opened or how big your facility or that kind of thing is. But if that's less than 10% of your revenue, then I would say that's not bad. If it's 20 or higher, if it's higher than 10%, then I would say look at making some changes so that number is less than 10% of your overall revenue. But I love that you have that number. So that's
Yeah,
awesome.
absolutely. And part of the reason that the 10% is important is because we know your payroll as a percentage of revenue for most people run 40 to 50%. And then you've got to pay your facility costs, and then you've got to pay supply costs and services costs. And so if you're giving more than 10% away, it's not leaving you any room for profit. So if you think about all those percentages have to add up to 100 and can't be more than that, which is why we're saying that 10% is the max discount makes sense for our industry. So do you want me to dig into the cost side?
Yeah, and give some examples of how to track the expenses.
Yeah, this is the hardest part, but it's really important. And once you get your book set up to where this is easier to pull and you understand it, it's going to be worth the effort. And as Robin said, knowing how much your costs are by your different revenue streams is really important in setting your pricing. So there's two types of costs that you have with your business. You have what we call variable costs, or the direct costs to providing the service. And that's usually your payroll for the people that are providing care, supplies related to providing care, and fees related to the revenue that you generate out of that service. So what the challenge usually is, people say, okay, yeah, I can figure out my merchant fees based on how much my revenue was in each service area. My supplies, I can tell that by going back through my invoices and know buying supplies for different areas. The challenge can be your staff cost. How do you allocate that? Because a lot of times staff work in more than one department. And so we really like if you're able to use QuickBooks classes, or if you have a payroll service, if you assign someone to the department to where they work most of the time, that's important. And then you want to separate out the payroll costs for the people that are direct providing the care versus your support team that are maybe working the front desk or doing sales or doing cleaning or supporting, and even your management and supervisor team, those we would say are fixed costs because their costs are there regardless of how many dogs come in the door. Whereas you want to look at your direct costs or people providing care, that should fluctuate. If you have less volume, you have less staff hours. If you have more volume, you have more staff hours or payroll costs. So is that clear so far, Robin?
Yeah.
Okay. So once you know your direct costs, you would split that out by each service and you want to look at the same time period. So since we just finished the year, I'd probably look at 2022 overall, divide your revenue by service stream, and then you have your direct cost and divide that out by service stream. And I would do these for your big service streams. So, if you have something that's 5% of total revenue or 10% or less, I wouldn't worry about it. I'd look at those main service streams. And then you're going to look at your profit and loss statement, and anything that's not directly related to providing care and one of those key services goes into a bucket we call fixed costs, which means you're paying for that cost regardless of how many dogs come in the door. So that's advertising, marketing, insurance, all your facility costs, your managers, supervisors. And you have to say, okay, how much was that for the whole year? And I need to allocate that out across all my services. And there's really two ways you can do that. You can do it based on the revenue they brought in as a percentage, or the way I like for you to do it is based on the space that's being used in the facility to provide that service. Because sometimes grooming and training don't take up a lot of physical space, whereas daycare and boarding does. And a lot of that facility cost is high because of the size of your space. And figure out your square footage used by each service, and if some shared, then just split it, but don't go over 100%. And then allocate those fixed costs to each service. And then you take your revenue minus direct cost minus fixed costs, and that's your profit per service. And that's what you really need to be looking at and understanding.
Yeah, so I'm going to put a link. We do have a whole template on this if you like Excel templates, or even if you don't. It's a good formula to use. It's called Pet Profits. It's less than $50 and you get a workbook and then all these Excel spreadsheets so you can track these numbers yourself and see all the math is done by the spreadsheet. So that's nice. I would say the most common challenge that we see when people are pricing their services is they take into consideration their payroll and the supplies they need. And so a really simple example, and I'm just making up numbers for the sake of math to do the math easily, but people will say, I have X number of dogs in daycare, so I'm making $200 a day for all those dogs in daycare, and then my staff costs are 100, so I'm making $100 a day, which is right if all you're looking at is the dogs you have attending and the payroll to watch those dogs. What most people forget about are those fixed costs, the fact that you're paying for your building, whether you've leased it or you're mortgage it or whatever you're paying for your actual building space, plus all of those things that Susan just talked about, the insurance, your utilities, whatever, administrative costs, the cleaning supplies, like all of those things, you have to factor all those things in too. Because if you don't factor those in, then all you're doing is covering your payroll, but you still have all those other things to pay. So you have to allocate those fixed costs to those services the way Susan just explained. Otherwise, you're not going to price yourself to be profitable. And that's probably the biggest reason we see that is people think that they're pricing for profitability because they're covering the staff that's watching the dogs. But you have to add in the rest of that stuff too in order. Otherwise, you're going to constantly get to the end of the month and say, because who gets paid last? This is not what we would recommend. But every single facility owner we know will pay their vendors and their employees before they pay themselves. But especially if you aren't profitable, that's the game you're playing every single month. You're playing catch up of, oh, I don't have enough money to pay myself, but I have to pay my employees because I'm not going to mess them up. But we want to have so much money left over. That's not a question. You've priced yourself for profitability so that you can pay everybody, including yourself. And we do like to pay ourselves first, but that means you have to have leftover money to pay your team too. Otherwise, you're not going to have a team for very long. Those are all important. All right, so a couple questions and then we'll wrap up real quick. If you have any other questions, you can post them in here. I did say early on, I said, I don't think I told you this, Susan, but early on, Brandon said, I find Susan very easy to listen to in the first couple stages of launch formula, and he hasn't heard much of me yet. So we get that. I tried to do a mystery shopper call one time with somebody hired me to call their facility. They wanted me to like mystery shop their facility and see how their staff, their receptionist and staff was doing. Well, they all had knowing dogs. So as soon as I called, I was like, hi. And I said 3 words, and the person on the other phone goes, "Is this Robin from Knowing Dogs? I recognize your voice." It's just very funny. So consequently, I don't do any mystery shopping anymore. Okay, so somebody said pet profits, is that in growth intensive? That is one
Yes.
of the documents you have in growth intensive.
I think it's in step 2, but don't hold me to that.
And in launch formula, we actually have a forecasting guide. So it's a little bit different because pet profits, you have hopefully some kind of historical numbers to use. So Jesse said, thank you for sharing. I've been trying to figure out my fixed cost. Yeah, I think the fixed costs are always the part that everyone not forgets about, but doesn't really know what to do with them. And just if you want to make it easy, just really trying to make that allocation as simplistic as possible. Like get 2 wrapped around the axle. If you have daycare, boarding, training, and grooming, don't spend about 5 or 10 minutes figuring out. Don't spend 30 minutes saying this is like 7.25 or whatever. Just make it fairly easy so that it's not too hard to figure it out. But again, this is a good time of year. A lot of times we tell people that right after the holidays is a good time to really look at your pricing and set new prices. We do recommend changing or increasing your prices at least once a year as a minimum. We've known people during this last couple of years with COVID and then all of the inflation stuff going on right now that have done more than once a year. But that doesn't mean you have to change every single price in your facility. We would say as a minimum, at least change one revenue stream and increase one revenue stream. But the bottom line really is what do your prices dictate? So if all of your prices are out of whack, it might mean you're changing all of your prices all at once. And if you're not profitable, you have to do that, especially now when prices of everything are going up. And I think in some ways it's actually easier right now because society is expecting prices to go
Yeah.
up. You obviously do want to communicate it and all of that. But if you're priced well, then I would still say every year really look at increasing your prices at least in one revenue stream as a minimum at least once a year. So your clients get used to that and you don't go for 3 or 4 years with ever increasing your prices. I
And
don't
then
know.
it's not a mental drain on you thinking about doing it because it's something you do every year on a regular basis. You've trained the clients to it and you don't have mental stress. And as Robin opened with that, what we found when people do increase their rates, they find out that very few people complain about it.
Yeah. And usually the people that do complain are people you don't really care if they leave anyway. So that's the other thing. So hopefully this helped to get really look at your discounts, really look at your pricing. And I will say if you haven't increased your prices in a year, you probably definitely need to, because I can guarantee you that your expenses have gone up in the past year. I can guarantee you. So you have to increase your prices so that you can keep up with that as well. I did put a link in the chat for our Facebook group. So if you want to continue the conversation over there, or if you want to ask questions from others, there's about 2,500 people or so in that Facebook group. It's free to join. Anybody can join, but we just ask that you are nice. Those are our 2 rules. You have to be nice and you can't sell stuff in there, but you can ask others questions. You can search the archives and see what other people are talking about with a huge wide range of topics. I think we've talked about just about everything in the world in there about operating your own pet care business. But definitely join us over there and we will be happy to answer any other questions or talk to you in that group. Otherwise, have a great
Well,
rest of the
Robin,
week,
wait,
everybody. Oh, what?
we're going to invite them if they want to do more work like this to our proactive
Oh,
profitability class because
okay.
we're
Let me
going
go
to
grab
do
that link.
a
First of
deeper.
all, we'll come back to that in a second. Somebody said, I dog sit, what's the general price to let someone's dog out during the lunch hour? So this is a great question because I actually did a pricing for profit webinar for Pet Sitters International a couple years ago. I think the average price is like $20 to $30. I can tell you that you're barely covering your costs, especially if you're driving there and depending on how far you have to drive. But again, you have to do what do you want to charge your hourly rate, and then what are your costs. Primarily your main cost is going to be transportation, and then the hourly cost, and then whatever fixed cost you might have as a pet sitter, which for most pet sitters they don't have a physical building. So it might be things like insurance or anything covering your car or your liability, bonding, that kind of
Website.
thing. Yeah, so those are your fixed costs. So you would do the same percentage, because I personally don't think, unless your all of your houses are really close together, if you're only charging like 20 bucks, I don't think that's you're going to make that much money. But in it seems like you are, because it's because you technically don't have any overhead, but you still have to look at that, the overhead of the insurance and liability costs you have, and then definitely transportation costs.